This is London with VIP Trader and Bitcoin Spike. We're going to talk about the open in the market. New York is going, cooking. Bitcoin is on the way up. Way to go. Way to go. If you caught our video last night, shout out. Congratulations. We had a probability of going up. We're going to discuss some charts today. This is London, former hedge fund owner, private, non-SEC, not financial advice. Go to your broker. Reason I'm not one. Don't have to deal with your financial advice. Kids want to go to college, huh? Your wife, huh? No. You guys go to your broker. Now, in terms of the charts, let's dig in and have a good time. Good morning to the VIP. We have got the 15 wide in the back. In terms of the setup, we may go through some of the cross time frame differentials. I hope that all the VIP are doing extremely well. Got some great news, continually great news, I'll say, in terms of our traders who are doing very well. Want to shout out and congratulate Flaz. Flaz is relatively new VIP. He's going to be starting our training rounds, our 100 rounds. We're going to talk about the patterns in play. You see on the bottom right now, the bottom screen, you're going to see, and guys, that's what I'm looking at in terms of the entirety of my setup. We have the best setup in day trading, period. Check it out. In terms of the bottom, we have the channel formation that I told you the bulls would try, and it's not that I told you, it's just a fact. It's a technical fact. The bulls would try and pick up in this zone. I will go over this technique to make sure that you understand the technique today. We will go over channeling. Okay, that'll be one of the things that we will cover today. We'll cover the probabilities. We may cover a bit today in terms of what do we do when we have mixed probabilities in the market, right? Aside from hedging or otherwise, what do we do if we have mixed signals? Let's say we have a 60% chance of going up and we have a 60% chance of going down. What do you do when you encounter empirical data as such? What is the best approach for that? We'll go over that as well today. And I want to shout out to all of the VIP traders, guys. Our VIP, and we're excited about our group and our international reach. I've been saying America's #1 trade group. You guys know that. And it's also Australia's #1 trade group. And it's also, I think, Scotland's #1 trade group. It's also, you guys got that right. We got some international reach. We've had from England all over to, I don't know. If I start including all the countries, we may have to start including all of the companies that VIP traders here have included, right? Because we've included like BlackRock, right? Former or current BlackRock, former or current JP Morgan. We've had some big hitters in our trade group aside from institutional, aside from international. And the one thing which everyone knows is the following in our group. And before we dig too far into the technicals on the DXY. Okay, DXY, potential for a pullback. If you're looking for a potential for a pullback, you're going to want to look at, just for assessment purposes, take a look at your 4 hourly. 4 hourly expresses a near flat top resistance, ascending line of support, which would give you a limited upside, more limited, and just pay attention. We'll talk about correlation today as well, but a more limited upside than, let's say, on that would be the 4 hourly trajectory to the upside, contemplated return to flat top resistance per the ascending triangulation. That's going to be a bit more limited than if you were to look at and just understand the patterning right now, whether or not you're into DXY or not, whether or not that's going to affect your trading today. Looking at the specific bull pennant, boom, on the hourly. I want you to compare just for purposes of understanding the differentials between the patterns. On the 4 hourly, you have the flat top resistance, okay? That would be an ascending triangle. What is the height? Expectation for the ascending triangle would be the amplitude of that triangulation, only the amplitude of the triangulation. Whereas on the bull pennant, the reason why bulls like bull pennants, right, is that we would have the full expectation, boom, carried up. You see that on the hourly, that preceding flagpole. A pennant is a type of flag. Bottom line, a pennant is a type of flag. You guys got that right, okay? So on that hourly, again, just to make sure that we're clear on this, I know some of you are really honing into your technicals and wanting to get all of this correct. The 4 hourly would be a mitigation, right? A lessening of the upward trajectory of the DXY, potentially on that 4 hourly, with just a stack of the amplitude of that ascending triangulation, okay? Now, the trajectory to the upside, I've let you know on DXY. Just for purposes of covering this, we'll talk about correlation. Bitcoin getting a nice move in line with the probabilities. Nice job. And guys, was like the analogy was like selling umbrellas on the corner of Fifth Avenue in a surprise rainstorm in terms of the specifics that were there, that we were trading, that we were looking at. And shout out and good morning to the VIP. I'm going to say good morning, Venus. How are you, Venus? Good to see you. Nice to see you always, and glad that you're trading, rocking and roll trading. Great to see. Indicators have been doing very, very well. When I say our indicators, I should clarify, okay? Because when I say like our Z-Pack is doing very well, the Z-Pack, what is it? It is a hybrid blend, solidified, I have to say, on a bit more of a calculative level. I have to say this, a bit more highly calculated. It is, as a matter of fact, the Z-Pack, but encompasses stochastics, RSI, MACD. All right, with a clear volatility gauge that you're actually going to see expressed with price. But if I had to say, oh, we're going to outdo RSI and outdo stochastics and outdo MACD, no, we're going to combine them. All right, we're going to combine them so that you don't have to look at 4 or 5 different screens or 4 or 5 different indicators, right? And we're going to refine it slightly in terms of the calculations that were presented or that could be presented on those specific indicators, RSI, stochastic, buying pressure. RSI and stochastics, it's just buying pressure. It's buying and selling pressure, right? So you're looking at RSI and stochastics, relative strength, and stochastics is a derivative, okay? It's just all it is a recalculation. Someone wants to recalculate RSI essentially. Just put it in that frame of mind mentally, okay? So relative strength index is buying and selling pressure. You want to know when the bears have sold too much or the bulls have bought too much. Capiche, yeah? In terms of stochastics, it's a quicker gauge, okay? If you have to wait, one of the big complaints on RSI is, well, I have to wait forever. It's like, well, you know, the 4 hourly, for instance, on the 4 hourly, and pay attention to this. If you have a cycle on RSI and it's like, God, on the 4 hourly, I have to wait for so long. And think of it this way, guys. You're still on stochastics, going to have overbought and oversold, but stochastics are going to deliver it to you. Are going to deliver it to you in a way that, well, instead of having to wait like 2 weeks, man, I have to wait 2 weeks between every 4 hourly oversold on the relative strength index on the RSI. I can't wait. I can't wait, right? So stochastics are going to give you more signals. Stochastics, when I say a derivative of the RSI, when you look at stochastics, you're going to have more of a cycle, more of a compressed cycle than you would on just relative strength index, okay? You should have more hits into overbought, more hits into oversold. Still a gauge and a derivative, okay, a derivative of RSI. Most traders understand RSI. It's like, oh, that's the simple one. I look, it's down here, I buy. I look, it's up there, maybe I think about selling. Huh? Maybe I think about selling, right? Everyone is geared towards the upside in markets. You know that. That bias is impossible to get through, and some traders over years it's impossible to get through. And it's like, you know, it's like down here I buy. When it gets up there, maybe I sell, right? That's it. So, but rarely are they, well, down here when it's oversold, maybe I buy. No, we're always eager to get in on the long, right? Testing those I would just say those just preconditions. You talk to a kiddo, if you talk to a kiddo about making money on the way down, someone brought this up to my attention, but talk to a kiddo about making money when something's going down. Nope. Just nope. Just literally talk to a high schooler, a junior high, elementary, especially, just, you know, you're going to make money when something goes down. Nope. You know, it's just the market ingrains in us. We make money when it goes up. So all to say, in line with this, is you judge your preconceptions about these indicators as well. Just pay attention, open your mind a little bit, okay? Be a bit more open to the dynamics of what we've combined in Z-Pack. Okay, it's called Z-Pack. That's it. It's a Z-Pack Extreme. I like that as well. But what it is RSI. What it is stochastics, and what it is also a layover with notional. I'm going to just say a notional momentum. And notional momentum, I'm just going to say the color dynamics involved in our Z-Pack is going to give you, for instance, on DXY, or for instance, clearly on Bitcoin. And nice to see. We'll go over the channeling again in terms of this pickup in this zone, this Level of resistance carried down to the level of support here in, and boom, that pickup. That's the first order for the bulls, right? And that was the first level for bulls. And we do have a catch below. You guys know, a more conservative level of bulls. Like, I'm not touching that, right? Maybe they listen to too much FUD or otherwise. We were in a pattern here with 72% probability of going to the upside. They're never easy to look at, are they, guys? But when you look at them and you look at them and you look at them and you deal with these patterns over and over again, and they continually bite you when you don't participate in them. And I'll just tell you, when you have a level, and this is an expansion here, we say rock the bells, boom, because they like to rock to the upside. They can rock down to the downside, okay? But this expansion is the definition of increasing volatility. Right? It is technically a bump and run. It is technically an expanding wedge, okay? Descending, expanding wedge. The bump and run sounds cooler, right? What is the bump? This would be the bump. Boom. What's the run? That's the question. What's the run? Yeah, we want the run to be somehow in here. We'll get through the technicals on this. Boom. We want it to run, okay? We would call this technically a lead in. Then the bump, then boom, we want the run, okay? The bump and run. Lead in means what? Lead in is a top side consolidation. A top side consolidation, okay? The top side consolidation is important. It's a requirement for, please pay attention, it's a requirement for any bump and run, all right? Now, in talking about, let's just discuss another parameter that we talked about yesterday, was a return to the flat bottom support. Pre-existing support on the 4-hourly was a more aggressive read, okay? A more aggressive read in terms of the return to this specific level. We've achieved that, okay? Each of these moves, each of the moves, very important, each of the moves includes its own level of empirically, and by empirical, let's say empirical data, okay? Factually driven, historically presented and synthesized data. Okay, I presented to a VIP member last night, to Venus last night, a program code that an author, an authority in TA had presented. And Venus, shout out, nice to have you here this morning. Nice to chat, VIP style in the morning. Be nice to get that chime working, won't it? Will be nice to get some chime working and get some. That's just a video integration that we're looking into, guys. That'll be nice to have in terms of more of a even-keeled, full flow of information and dialogue from and between VIP. Looking forward to that at some point, and excited about the progress that we're making, just so that you guys know. So as we were to talk about any kind of competing probabilities in either direction. We kind of covered ZPAC, what it is, what is relative strength index, pressure between bulls and bears, buying and selling, okay? Whether or not they've bought too much, whether or not they've sold too much. If they've sold too much, yeah, we think about buying. If they've bought too much, yeah, we think about selling, right? Easy stuff. If we look at stochastics, it's essentially RSI, right? Essentially RSI, stochastics. Know what it is? STOCHASTICS, stochastic. That is a CH, stochastics, all right? So stochastics is just more of a frequency, more overboughts and more oversolds, right? It's almost like they've run it through a multiplier. If you were to look at it, it's like if RSI is like this and only a few signals, they kind of multiplied the process to where on stochastics we get boom, 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 boom in the same range. Okay, more of a frequency of the deliverables in terms of the signal presentation. Okay, that's stochastics. So RSI kind of slow is the road. Stochastics, boom, 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 boom. Still the same information, just run through a multiplier, okay? Recycled information so that you get more looks at your overboughts and your oversold so you can trade more. Hey, you don't have to. You don't have to, right? If you want to. That's the idea, right? So in terms of that, and in terms of a momentum gauge, I would just say our momentum gauge on ZPAC, just to finish this conversation, and this is buying and selling. When I talk about when I talk about the volatility, we look at buying and selling pressure. We talked yesterday about what is volatility. Volatility in the context of a pattern. Okay, it has a few different contextual meanings. Volatility, when we talk about a pattern, is the height of a pattern. Okay, that's the volatility. All right. Now, if I'm defining volatility a little bit differently, and nice to see on that 8 hourly, nice to see that swing to the upside in terms of our capital line. Our capital line swinging to the upside. Boom. Nice to see that, right? That daily, there we go. You see that daily. Yay, the hint of the turn on the daily. Very nicely done. You see that white, okay? Potential transition for the daily. That's what we needed to happen. Yes. What got us there? Did you guys check out the 4 hourly? Blending your time frames, right? Blending your time frames, and this day is not over. We are right now contradicting, if we were to look at it, we are contradicting the correlation, the inverse correlation, rather. The inverse correlation between the Oh, there went the cell phone. Nope, remote control. We're okay. We're okay. We can get a new remote control easier if need be. We have a remote control, just so that you guys know. Cool camera, huh? Very cool camera. We like this. What's up, VIP? Yo, yo, yo. So, in terms of drop the remote. Sorry, just caught that one on film. Good. Just slamming the equipment around, isn't he? Huh? Anyway, so as we were to reframe, breaking the correlation. The inverse correlation. What does correlation mean? Well, correlated. All right. Remote goes. Let's say correlated is what? Same direction, same time. Remote goes down. I go down to get it. Okay. Both things moving the same direction. Yeah, correlated. There's a correlation. They're moving in the same direction. We also like at the same time. There could be a delay factor, like the remote idea. Good example. The remote drops, I drop. Okay? Now, inverse correlation means moving in opposite directions. Remote goes down, I get mad, I stand up, and I walk out. That's it. I'm done with this, right? Something goes down, something goes up. So if we have opposite directions, we would have the perfect correlation technically would be 1. They're perfectly correlated. Two things that are perfectly correlated would have a correlation of 1. Okay? Perfectly inversely correlated, guys, they're moving in the opposite directions every single time, is -1. Okay? If something has no bearing upon the other direction, if two things are moving completely randomly all the time, the correlation is 0. Okay? So 1 means same direction every single time. Yes. Inverse correlation, opposite directions every time, is what? -1. Okay? And if it's all haphazard and completely random, guys, difficult to achieve. Okay? 0. Okay, is the correlation reading. Now, as we were to look at, and if you've been paying attention to Bitcoin, she has busted through this correlation element a few different times the last few weeks. You guys know that. Let's see what we got here. Bruno West, hey, what do we got? HL3, hi, can you confirm me what is PIPS? The same as, I'm struggling to understand this. Hey, we got some new traders. Welcome to our VIP group. We're trading Bitcoin right now. PIPS, look into Forex. Go into a Forex document or trading category, I'd say right now, if you want to get into PIPS. Forex is on the fringe of what we are looking at right now, which is essentially Bitcoin. We prefer Bitcoin. I've been in the context of a lot of different pro traders on Forex. I prefer Bitcoin. I find when the Forex traders get around me or crypto, they start saying, hey, yeah, they want to get into Bitcoin. If you trade Bitcoin well, it's hard to beat, guys. It is really hard to beat in terms of liquidity, but you can do well in Forex without a doubt. And welcome to our group if you'd like to hang out in terms of technicals. So shout out to the VIP. Talking about inverse correlation, you guys got that right. Talking about the issue at hand that I need to stay on track with is the DXY. Okay, dollar index. With the DXY, we have an inverse, suppose, guys, or assumed, and really over time, yes, an inverse correlation with Bitcoin and equities, meaning DXY goes up, Bitcoin goes down. DXY, dollar index, goes up, power of the dollar, okay? It's a dollar index. Goes up, Bitcoin goes down. Inverse correlation, okay? Today they're operating in the same direction, all right? Today they're correlated. Where do we see that inverse correlation? The inverse correlation is going to be today with equities and the DXY. So today Bitcoin showed up, and bravo, hey, Bitcoin showed up, complied with our probabilities that we were looking at. Did you guys see? Taiwan Semiconductor Manufacturing. Interesting, huh? Just noted in the news. I'll note in the news, and I brought up Taiwan Semiconductor Manufacturing. We trade that on BTCC to the extent that we choose to trade any securitized tokens. Great exchange, by the way. But looking at Taiwan Semiconductor, you guys heard me probably talk about that a little bit and talk about that the last week or the preceding week. Like, what's the Taiwan Semiconductor? Some of you looked it up, what it is. Berkshire Hathaway just pulled off a monster. Warren Buffett pulled off a monster day trade on Taiwan Semiconductor. Yes, indeed. Hit the roll today in terms of the news. What do you make? How many billions? What did it? Big trade. Almost a day trade. Boom, taking the money out. Nice move, Warren. Huh? He still got it, huh? You guys see that in the news? Big trade. I'll bring you guys the specifics on it, but I've been a little bit. We've been talking about Taiwan Semiconductor a bit in the back. Every now and then we've been mentioning it, and Warren Buffett did a nice trade. Nice trade. Way to go, Warren. Hey, now in terms of the specifics here, equities are down, okay? You see some red here. NASDAQ, S&P, etc. You've got the majority of the equities down. Tesla's still fighting. There are no bears left with Tesla. Maybe, I don't know. It's a nice run. Looking at technically indicated run. You guys want to know? Let's go through this real quickly in terms of Bitcoin. What got us up and out on BTC? What was the key critical factor, the componentry, and what do as we have any type of competing, let's say competition amongst our different probabilities? So I got a 60% chance of going up and a 60% chance of going down. What's the number one question? The number one question that I want you to ask if you have competing, listen up guys, if you have competing probabilities in the market. I mean, I got a 60% chance of going up and a 60% chance of going down. I have a multiplicity of patterns here. One's telling me 60% up. The other's telling me 60% down. What's the number one question I want you to ask yourself? Are you in the money? Are you in the money? That's the number one question. When you look at the fact, well, this is not giving me the right answer. My technical analysis isn't providing me the proper answer. Are you in the money? Bottom line, did you trade? A, if you traded, did you trade appropriately? B, C, are you in the money? And if A and B are true, if you traded and you traded it appropriately, you're going to be in the money, right? Did you buy lower? Did you sell higher, right? Did you pay attention to the ZPAC? Did you pay attention to RSI, stochastics? Did you pay attention to your MACD? Did you pay attention to your Bollinger Bands? Did you pay attention to your moving averages? Yeah. If you did, more than likely than not, you can answer the question while you have some mixed signals saying, okay, and I'll say, and adding in onto all of that, because that's when you start thinking, oh, there's a perfect answer to the market. I tell people all the time, it's not a perfect place to make money, guys. It is not a perfect place to make money. But I tell you this, it's a good place to make money if you focus on all the factors I just brought up. Everything from your technical patterning to your indicators, RSI, stochastics, MACD, your moving averages, your Bollinger Bands. Do you know how to synthesize all that information with a multiplicity of patterns? If you do and you work on it, shout out to Flaz, Australia, loud and proud. What's up, guys? Australia. What I'm going to say is Flaz is going to start our 100 rounds. 100 rounds is the way to be, guys. That's our training process that has been extremely productive for traders. I'm not selling the course. If you guys want to engage in a process that's worthwhile, get it. Go get it. If you don't want to join the group and you still want to do it, watch old videos till you figure out what it is and go do it. Literally go do it on your own and be well. Got to tell you guys. And go kill it in the markets. So looking at the question of, well, we have mixed signals, what am I supposed to do? Are you already in the money? Are you already in the money? If you are, many times, if you have appropriately traded into a situation, you'll be far enough in the money where literally you could take all of the money that you traded into it or a multiple thereof out and let a fraction of it ride. Let a fraction of your initial trade amount ride. That's all profit. Boom. All right, and I should say that that's going to be if you were. Let's just say, well, let's measure the move here to get through this. I don't want to make sure this comes out clearly. I'm a little bit distracted. I don't want to go through pips right now. I'm sorry. Someone is asking me about pips and forex. It's just on my screen. We'd love you to hang out in the back. Maybe we'll do. Maybe I'll do a tweet on it in a little while. I want to focus on this if that's okay. Don't want to go down the forex road. Maybe we'll start having a forex hour or something. But I don't know. Shout out to Big Joe in Houston. What's up, Big Joe? Big Joe, big guy. Big guy, guys. He's huge. He's a good guy. Good trader, pro trader. He trades Forex all the time. So let's talk about like a 6% maxed move. 6% maxed move here. We talked about the pickup level. It pushed. Bitcoin loves to push. If you trade a lot, you got to know what you're trading, guys. You got to know the characteristics, the style, etc. But as you were looking at level of resistance, level of support, this carry down, I promised you guys we talk about channeling. Like that looks so easy right now. I'm going to tell you guys, everybody in the market right now is drawing. Now, most of them are doing this. Most of them are drawing from here to the bottom to the top here, and they're doing this with their parallel channel tool, and they're bringing this down like this. Now, this is what 80% of the people probably did, right, in the market and said, okay, great. Now we have a channel with an expectation of a hit, ideally for bulls up across the top. You guys see that. Now, the trick was this. The trick was, before we had any move to the upside, the trick was identifying a key point here, resistance up to, let's say, a topside resistance. You've got to grab a pivot. I don't want to say a minor high, but you have to grab some sort of a peak or pivot here in this zone, and you have to align with the expectations of the specific channel angle that you would hope to typically establish and find in the markets. Yeah. In line with the angle that you would typically hope to find in the markets on your trajectory to the upside. And what starts this whole process? What starts this whole process? The carry down from resistance to support is a bit more of an advanced and potentially variable. Okay, not only is it more advanced and potentially variable application of technical analysis. You got it. It is more advanced and potentially more variable. Okay, what the majority of traders are doing today in terms of picking up on Bitcoin, this level of support, boom, to this level. And you guys know this is London, former hedge fund owner, private, non-SEC, not financial advice, okay? Looking at the framework, we trade, guys. You want a broker, go get your broker. Looking at this framework here, looking at that bottom line carry up, the bottom line carry up to the top level resistance, this is more reliable. It's more reliable. It's more standard of the industry. I'll tell you, the top side carry down is and I'm saying this to you for a reason. I'm not undoing what we did in terms of bringing this to your attention. I'm just telling you, if you engage in this process, and what's the key that we need to start the process? What do we need? We need to move to the upside. Yes, we need to move to the upside. Boom. We need to get up and out of a region, okay, of some pre-consolidation. Boom, with a move to the upside. Then we need to try and define from a specific pivot below. And again, in line with our expectations for the angle of ascension for a channel, okay? And I mean that because, we would look at, essentially, we're going to have some options here. As we were to look at, okay, well, I expect a price channel, let's say, to be about like that, all right, to have an angle of about 45%, right? Now, anything lower than that, I'm concerned about, right? Anything more steeply oriented than that, I'm worried about its ability to sustain. This is not me. These are not my ideas. This is not just what I thought up last night. I want to go ahead and present it to you. No, this is New York Institute of Finance. You guys know that. New York Institute of Finance will present to you this one. It's too aggressive. This two, about a 45-degree angle could be sustainable for a price channel. We could have more aggressive moves to fall in line with the one, but a standardized feature when we see a strong move to the upside, right? Okay, if we're going to design a 1, 2, 3, 4, 5 Elliott wave channel, price essentially a constriction of resistance and support. We have an angle which could be, let's say, a price channel which could be too aggressively oriented in terms of the slope of the angle that unlikely to maintain. We have the middle of the road. That's what we like, right? And we have just not even enough in terms of the angle of ascent to even really count as a real price channel, right? There's no momentum really to carry to the upside. If it is indeed even really carrying to the upside, just more of a consolidation. So when we look at a preceding pivot, the difficulty here is that traders could have gone like this, right? Traders could have gone like this, and we could still have the expectation, right? Because we grabbed a different line here. Well, maybe we did this right here and we're up and over and we've got this bottom line expectation. This is the variable component that I bring up to you so that you'll know just to express a touch of caution on this matter if you're operating up above and drawing your level of resistance down. Now, we nailed this as the primary feature for the bulls to pick up on, this level of support here. We talked about that days ago before that move. When you're doing this and engaging in this on the micro, I recommend you do this on the micro, on the 15-second, on the 30-second. Yes, on the 5-second, on the 1 second. Why would you do this on the 1 second? Because you could do this 100 times in one day. You can literally do it 100 times in one day on the 1 second time frame, and you can day trade it with guys, just salt and pepper style, just this type of very, very light cash, and understand what's going on as a channel line builds. When you do it, start from the bottom up. Okay, start from the bottom level of support to the top side resistance. Okay, as you become proficient in that and you start to see, okay, which ones of these, what's kind of a precondition for me getting into a 1-2, we actually call this, and this is difficulty of, there's a real difficulty of Elliott wave. I don't want to get into it right now. It's just a difficulty. I don't think, you may not find it agreeable in the context of this conversation. In the back, I'm going to post some charts on Elliott wave, okay? We're going to deal with what this is down here, okay? If there's a complaint box with Elliott Wave International, we have a few certified complaints that we would like to deliver to them, but we appreciate what they are doing in the technical field. Yep. Certified complaints from Bitcoin Spike on Elliott Wave International in their complaint box. That's all right. We're VIP. We got to do it, guys. Now, in terms of the carry down feature, but I mean that go into the 1 second. If you're just starting, what you need in terms of, or if you're developing, or if you can't book 4 positive trades yet, what do you need? You need the ability to book 4 positive trades. You guys know that. You need the ability to book 4 positive trades. If you can get to the market and book 4 positive trades, guys, the market's yours. It's there when you need it. It's going to be there during a cup of coffee, before or after breakfast, after the kids take off. It's the market. If you could sit down and book 4 positive trades, you know where you're at with the market. If you sit down and it continually shows you what for, bam, bam, you're not there, guys. You're not there. The market's not working for you, all right? You're working for the market and for whoever owns the market. So we encourage you to build up that specific level of consistency, okay? So in terms of this feature here, always just start off, before you get a little, I'd say advanced with your technique, start off with on those lower time frames. And that's the best place to do your 100 rounds, your training. Get into the 1 second time frame. Okay, get into the 1 second time frame, the 5 second time frame. I know it seems like too much. Get into it. You need more patterns. You don't need to read a book all day long. I understand that one. I really understand that one. No, identify the pattern. Get through 50 or 100 patterns on your 5 second time frame, on your 1 second time frame. Spend 4 or 5 hours trading at the 1 second, 5 second. Go through 100 patterns a day. Click, hit, work. Limit your drastically limit if you're trading in a 1 second, 5 second, and just powering through. You need to make sure you've got give yourself a budget for the month. Let's say that's fine. Every day I'm gonna throw $5 into it a day. I don't care, but get through the patterns. Get through the patterns. Get through as many patterns as you can in 5 seconds, 1 second. Okay, you're going to get more practice. When you're looking at the hourly, the 4 hourly, the 8 hourly, the worst thing that a new trader can do is be like, well, I understand the patterns. I have the answers in front of me. I'm going to make a bigger move here. I'm really going to do well in the account. I will tell you, the better traders in the market have so much more experience than you in terms of the number of patterns they have traded. You don't even know what you don't know until you dig into the lower time frames and get through that volume of trades, the volume of patterns. Trade 1,000 patterns. Trade 500. If you can't do 1,000, if you can't trade 500, trade 100 patterns. And I mean, have it not notched in your belt. I've traded 100 ascending triangles. I'm telling you guys, we saw a video the other day of some kids doing stunt bike routines, pro stunt bike, not dirt bike, street bikes, right? Just little, Hutch Huffies, whatever they were, doing flips and turning the bars and everything else and swinging the body of the bike around and landing sideways on one wheel. I haven't really seen them do that yet, but, not many of them are landing on one wheel. Noted, huh? We'd like to see them do a couple flips and then land on one wheel down the dirt track what are they doing? Someone talk to those guys. But, and as you think about it, those guys on that bike, I posted it in the back. I'm like, do you think that the day traders who have been around the system for long enough and the market long enough, do you think they have any tricks? And guys, it was so apropos. When we looked at this video in the back, it's all these kids doing stunts that you couldn't even imagine like doing. And leave it to us as we presented it. Like, there's one thing I haven't seen him do, right? And it's okay. That's the way we think. But when we trade a lot, it's not a bad example for those of you who saw the video, but it's immediately boom, 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 right? It's like, yeah, we saw those tricks. We saw these guys flipping handlebars, doing backflips up in the air, swinging the bike body around, pulling an ollie or whatever they were doing, and then going down and bam, landing perfectly. Like, yeah, do you think day traders? I mean, people show up to the market with a book. They show up to the market with a book, and they think that they're going to be prepared to go pull a backflip in the market like that guy. I just saw it on TV. That guy, he's got a gold medal. He's a champ in bike raking and racing or flipping or whatnot. And they think, I got the book. I got the instructional. I'm going to pull a backflip on the bike. Hey, mom and dad, watch. Hey, kiddos, watch. Dad's gonna pull a backflip, ollie triple flip out on a bike. Watch this. Yeah, I'm gonna go down the ramp. I'm gonna go down the ramp. I'm gonna go up the hill onto the jump. I'm going to flip my handlebars, says Dad, around in circles 3 times. Then I'm going to release the body of the bike. I'm gonna swing it around 4 times. I'm gonna turn it sideways, put it up over my head, and then I'm gonna land on the downside trajectory after being in the air for about 4 seconds. Oh, wow. Okay, Dad. Yeah, come on, guys. When you look at that as a good analogy, because in the market, is it any different? You could read a manual on how to do a bike trick. Huh? Yeah, you could read a manual on how to do a bike trick, but the bottom line is, it's a little tough, guys. It's a little tough, and you're having to compete. The bottom line is this: you don't have to be a physical expert and some sort of a acrobatist at all to participate in the market, and it takes logistical skills. It takes know-how, discipline, perseverance, all those great things, right? It takes a characteristic set, strong characteristic set, a lot of patience, right? A lot of patience. But as you look at it, the guys who've already they traded 100 descending triangles, all right? They've traded to the point where they know what a roof is. They know what a roof is, what an expansion to the upside, downside, a pullback, a throwback, and it almost sounds like a pullback, a throwback, right? They know your expansions. It sounds like you're talking a different language immediately. Could be a turnoff, right? Now, I don't know what those guys who are doing flips, how they talk or what their tricks are. But when we start to talk, depending upon what we're saying, it immediately starts sounding like we're guys. Do you know how to run with your stochastics RSI if we throw a Z-Pack at you? Do you know how to go cross time frame, right? Cross time frame, blend in the micro to the macro. Yeah. The people who know how to do that are the ones who've spent enough time with it. And if you're looking to engage in that process, and shout out to Flaz, I know that you're getting involved in 100 rounds today. You're going to get there, but it's about the repetition. Yeah, you got to learn how to go down a small ramp, right? On the bike example, go down a small ramp. Oh, real slow, huh? No heavy cash at all. Real light exposure in terms of that. Real light. One of the infographics we have is like put $1 in this direction and $1 in that direction. That's it. Watch them go. I want you to hedge first of all. Hedge. Get you the infographic today. Plaz, relatively new VIP who's starting training today. And what's the point? You'll read the point. I want you to go $1 long and $1 short. And the new trader says, "Oh, I know, but Bitcoin's going up. Bitcoin's going to go up. I'm going to miss it with." Oh, whoa, whoa! If you don't know how to trade, Bitcoin's going to do two things: going to go up and going to go down. And if you don't know how to trade, what's Bitcoin going to do? Yep. Take you off the track. Take you off the track. So when we talk about take you out of the market, I've seen it a ton of times. People who don't want to build consistency. So engaging in, okay, if it's the example with the bikes, we get into the small hill. Just okay, we got to learn to roll the pedals here. Okay, this is the steering. Oh wow, this bike is more aggressive, or this bike is lighter than I thought. Oh wow, huh? This could get away from me in a hurry, huh? Might make it easier on the jumps. However, that example will feed through to you. Start light till you learn, until you've had enough exposure to the dirt on the road, right? The dirt on the jumps underneath you, right? You know, the speed, the G-forces, all of the stuff that we do in trading is a dynamic of experience. And when you're more experienced, some of the things, it's not the excitement and the backflip and the this and that you'll see a pro biker or trick biker do. It's not. Some of it is the opposite, and it's hard to master. Okay? Pay attention. Some of the tricks pulled in the market, as we talk about, guys, if I reel out the indicators again, you got that right, huh? Sounds like I'm speaking another language if you're not used to it. But some of the mastery of the market is what? Is the opposite, is the ability to disengage. Zen master Sun Tzu say, right? Patience, waiting. It's the person who shows up, is it going up or down? I mean, I want to know, is it going up or down? What is this? Is it going up or down? What's the answer to this? Is it doing this or that? Whoa, 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 whoa. Bigger traders I work with is what? I have my levels. I have my entry targets. More sophisticated traders, I have my position considerations. You mean not the guy that just shows up and says, is it going up or is it going down? Yeah, listen, I understand all that. The traders, they'll show up and they'll say, hey, listen, I understand all that. I understand what you're talking about with RSI and all these other different things, but is it going up or is it going down? Oh, but you understand all that, right? You guys know how much time we spend over a period of days to evaluate this move. Yes, we spend days to evaluate this move. Without a doubt. I tell you, it's like selling, what is it? It's like selling umbrellas on the corner of Fifth Avenue in a surprise rainstorm. Boom, this pattern. You guys know. With what? With an understanding that you still have a 28% of failure. But what does that mean? It means it's overall, on the whole, going to pay like selling umbrellas. You guys got it. On the corner of Fifth Avenue in a surprise rainstorm. You can visualize that. Fifth Avenue, New York. All right. Tons of people. Surprise rainstorm. You're the only umbrella shop open. Let's say that too. You're the only umbrella shop open on Fifth Avenue in a surprise rainstorm. Hey, better analogy. Now, to fill in the gap here, to fill in the details, what's required? An understanding of the pattern. Because if it were to go down, what additional opportunity would it present to you? More volatility. More volatility. What is volatility in the equation of this pattern? You're not going to know if you haven't traded 100 of these. I tell my good friends, and they're VIP, I tell my good friends, go trade. When I care about their trade results, guys, pay attention. When I care, me personally, about their trade results, I tell my friends, and they're VIP traders, guys, they're in our group, I tell them, Go trade 500 of these. How many have seen that in the back? Go trade 300 of them. Go trade 100 of them. Does it replace? Does it replace a bull flag? Not at all. Does it replace a falling wedge? Not at all. Not at all. Do we catch the bull flags and the falling wedges? You betcha. What's the overriding higher level of probability in the context here? Is it the highest probability is going to be the falling wedge? Nope. It's not, based upon all of the empirical data, okay? Based upon all the empirical data, the trick here, the exclusive rights for the umbrella sale, the umbrella store on Fifth Avenue during the surprise rainstorm, right, is doesn't belong to the falling wedge, right? Now we have our own tactics that deal with the falling wedge. We have our own tactics on a breakdown, right? And the notion is this is to give you a continual level of strategy to be able to deploy in the market. The challenge to you is this, all right? That's the notion, to be able to give you a strategy to participate in line with the maximum probabilities, okay? And to do so with an encouragement that you can appreciate. And just think how difficult this could be. What if this were just an absolute, let's say we were running a simulation right now. And let's say, what would we do? I mean, what should I do today on this? Because at some point, I want these guys to understand that if we could drop down to this level of support, interject up through here, it'd be a bigger move for them. Just imagine a conversation in the back or someone running the market. I know, but the problem is these traders, they have way too much money, and at this point, they won't survive this drop. Can you imagine having that discussion? Yeah, but for the ones who would survive the drop, get down to that level of support, they would make so much more money through that move. Well, what do we do? Well, 70% of the traders aren't going to survive this drop. I guess we're going to have to give it at some point. We'll wait. We'll give it to the 30% of the traders, the top line traders, or the 10% of the traders who are really ready and capable to participate at this level. You start thinking big money, right? The big money is already below. That's not that much further below. You know that. And when you understand the patterns in play, and you understand everything from our fire and ice. We're hitting right into our 8 hourly. That level has traded. That's nice. What I just say is this. I encourage you all to continue to refine your approach. Let the market teach you as much as you want to learn from a book or from me or someone else. Dig into the lower time frames. I challenge you. Dig into the lower time frames. Hit 100 of these patterns. And let's do this. Hit 100 of these patterns in terms of this. You won't have to really listen to me. You'll instead of listening to me, you'll be agreeing with me. Try me. You'll be agreeing with me. Trade 100 of these of a falling wedge to where you can read through the, let's say, the features in terms of the probabilities, and you could really understand what's going on. What is that? What is this? That'd be nice. How often does that happen? Trade 100 of them. Trade 100 of these. You'll know exactly what this is. You'll know exactly what this is as well, in terms of a completion of the preceding primary pivot of the descending wedge. And you'll know, yeah, that would be nice, why I say that. So it won't be me talking to you. It'll be us talking. That's the bottom line. That's the best thing in VIP, when I can have conversations with traders who are really trading. Yeah? Very nice. So trade 100 descending wedges, right? Then you make the call. Then you make the call, and you'll know. It'll be us talking. It won't be me telling you, or it won't be anything like that. It'll be you deciding and you making the call after you've traded at least 100 of these on a lower time frame. Trade it on the bigger time frame too. You have the opportunity to. But you're going to know based on a lower time frame approach and trading 100 of these on the 1 second or 5 seconds. You're going to know. Do I really want to trade? Do I want to get in right here? Do I want to trade this on a breakout trade? What's the answer if you've traded 100 of these? In the last day, if you've traded 100 of these, let's say in the last 2 months, if you've traded 200 to 300 of these in the last 2 months, several months, do you typically want to engage in a breakout trade? What's the answer? If you can avoid it, if you can avoid breakout trading anywhere, avoid it. Why would you say that? Why would you say that? Because every single time, pull up a pattern right now. Pull up a pattern right now, your favorite pattern to trade. When you're trading a breakout of that pattern, what percentage of the time do other traders have you beaten? What percentage of the time when you're trading a breakout do other traders already have you beaten from somewhere else in the market? 100% of the time. 100% of the time when you trade a breakout, ooh, it's exciting, we're getting a breakout. Oh my gosh, I wonder what such and such influencer says. I have to plug in. This is the moment for Bitcoin. Are you kidding me? 100% of the time on every pattern you look at, on a breakout trade, 100% of the time, guys, every time someone has beaten the breakout traders. Try me. Look at it. Every single pattern. Someone in the market, many people in the market have already beaten the breakout traders. You wonder why it's difficult to trade patterns all the time. Hey. So, a little bike trick, huh? Let's flip the handlebars around when we're up in the air on the first jump. You got to learn. I see. Now you have to learn on a descending wedge how to get in before a breakout. These are the details incrementally that you're going to put together as you advance your trade game. I'm excited about watching you guys advance it. That's what VIP is all about. VIP Trader. Cool stuff, guys. And what do we got? So we have this playing out. Let's take a look at equities real quickly. New York is open. You guys know that. NASDAQ, SP, what do we got? Inverse correlation, regular correlation. Let's see what we got in terms of VIP. Hope you guys are doing well. Going through a lot in terms of your approach in the market, encouraging you. Flaz is starting his 100 round. That's a good day for us, guys. Guys, we want to see Flaz's progress. The VIP, our VIP that do 100 rounds, man, guys, I'm telling you, if you really approach it the right way, man, you learn what consistency is. And when you learn what consistency is, it's like your account just says, hello, how you doing, as you start to increase the amount of your trades. I literally tell people to start with $1. Start with $1, okay? If you want to start with 10 cents, does it bother me? Not at all. If you start with a quarter, a literal quarter, I'll tell you, I interact with traders, guys, all the time, that a quarter ain't a quarter anymore. Guys, a quarter to them in the market is what? 250 grand. Bam. Learn to stack your quarters before you try and stack dollars. It's the traders that get in with the, and you guys know this, I repeat it so that you're reinforced, so that you're not swept up by a move in the market, and all of a sudden this bad habit comes through, right? Like, yeah, the bad habit, like the ex-girlfriend or the ex-husband or the ex whatever it is, you just got to pick up the phone and make the call. Whoa, 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 whoa. That same feature where I just got to put in the more money that I just got to, oh, come on, guys. Let the girl or guy go. Let him go. Focus on you for a minute, right? Looking at the pattern, looking at the dynamics of the market. If you can't operate without being a part of the price action, schedule in VIP style, Bitcoin spike style on your accumulation levels, heavy towards the downside, double down at your levels. Dollar cost average, boring, boring. You dollar cost average, boring. Double down, double down. Good challenge. And if you don't double down at your lower levels of communication participation, let's say lower levels of, and pardon for that, if you're, I've got two things going on my screens right here. If you don't double down, okay, at lower levels of possible participation at a lower price, and you tell the market that you don't want to buy more at a lower price. This is the biggest problem with dollar cost averaging, guys. If you tell a market, I don't want to buy any more at a lower price, if you offer me a lower price, I'm just going to offer you, I'm going to buy the same amount. You're operating contrary, and I don't talk about this, haven't in a while, but you're operating contrary to the absolute principles of supply and demand in the market. You may think you have it licked. Yes, price goes down, I'm going to put a little bit more in. I'm just going to put a little bit more in. You are absolutely operating contrary to the entire principles that govern a market of supply and demand. You got it? I'm being offered a lower price. Well, I still want just as much. Are you kidding me? Are you kidding me? Lower price on an accumulation basis, particularly something with a cyclical effect, i.e., Bitcoin. Lower price, you buy more. Double down. Yes. Now, with your leverage trading, etc., things change a touch. You can still do beautifully well with scheduled in managed futures. Explore the concept on your own time. How would you do leverage and manage futures and explore it on your own time? Okay? Yes. But the dollar cost averager, simple approach on crypto and everything was volatile. I'll continue to put in the same amount. Guys, operate in line with logic in the market, in line with the fundamentals of the market. Lower price, double down. You're like, well, that would have been nice to hear. Oh my gosh. Oh my gosh. Has anyone watched any of my old streams? Oh my gosh. Yeah. Big time. Double down. Double down. And what's the best part about that? The best part about double down is the trader who's inexperienced would say, well, I mean, I can only double down so many times. It becomes difficult to participate. Really? 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 Okay. So what does that mean you need to have? Well, I would have to have a lot of money. Maybe. Maybe you'd have to have a lot of money, or maybe your level of exposure in the markets would need to change. Forcing people into the idea set, the mindset that they need to have heavier cash reserves. Relatively speaking, it doesn't mean you need $1 billion. Many of the people I talk to have that. It doesn't matter. If you have 5,000 or $1 billion, you need to gauge and go through the process of understanding what your exposure is in the market. You say, well, I don't like that. At 50,000 or 60,000, I barely have anything. There's no exposure in the markets. Really, huh? You guys watch some of my many of my old streams. So many, and the VIP who've been around a while. Like, yep. And shout out to all the VIP. Shout out to AJ Crypto. What's up, AJ Crypto? Longest standing VIP member. You talk to him, huh? If it's going down there, I'm buying a lot more. Love that. It just is a fact, huh? AJ Crypto in the house, former U.S. Air Force. What's up, brother? Everything good, huh? In terms of the details here, we've gone through the channeling, we've gone through correlation, we've gone through RSI, stochastics, we've gone through MACD, how that's incorporated into our presentation of the Z-Pack. Let's see what we got. Let's see. Let me send a text. Let's do this real quickly. And I hope that you guys are doing well. Let me check the back rooms. Let's see here. Okay, I got this down in the back room. We're good there. As we were to talk about, again, mixed signals. Okay, it's the impatient trader who shows up and wants to turn on a dime right now. Okay, I'm going to ask you as you evaluate your positional interest with Bolkowski. Okay, as you evaluate with TA with New York Institute of Finance, as you work on building and booking additional positive trades, guys, I talk to some of the bigger cats with the bigger stories that you know about or that you don't know about. I mean, guys, I talked to the guy, the VIP, who makes $1 million on $1,000 investment. Hello, good morning. Good morning, good morning, good morning. I talked to the VIP who makes $1 million on $1,000. $1 million on $1,000. Uh-huh. I talked to that guy. I know him. VIP. Our VIP. Yes, I talked to the guy who makes $1 million on $1,000. And what does he want, guys? What's the only thing in the world he wants to do? I'd pay attention. Listen up, VIP. What's the only thing in the world that the trader who makes $1 million on $1,000? turns $1,000 into $1,000,000. What is the one thing he wants to do? He wants to book positive trades. That's the only thing he wants to do. Hello, good morning. Tune in Tokyo. Tune in Tokyo. Truth, fact. The guy who turns the $1,000 into the $1,000,000, what does he want to do? The only thing he wants to do is what? Is book positive trades. Well, that's impossible. No. Book positive trades. When I talk about our training program, when I talk about 100 rounds, it's not just an idea. It's not just we'll go ahead and just try something. No, it's because the guy who turned the 1,000 into the $1,000,000, what's the number one thing on his agenda? Number one, booking positive trades. Booking the next positive trade. Period. Period. End of story. Champ level. Yes. Now, talk to the guys. We deal with the guys. All right? Who are throwing in quarters. 25 cents, yes. Also 250 G's. Like right and left. Boom, 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 boom. 3-4 trades a day. Bam, bam, bam. Setting positions in 4, 5, 6, 7 of these at 250 a pop. Boom. What's the number one thing they want to do? Guys, just like the $1,000. The guy throwing out 250 G's right and left in 5, 6 different positions. What's the number one thing he wants to do? He wants to book positive trades. He wants to book positive trades. One common element here. Yes, one common element, right? Booking positive trades. Now, when you get to where you just can't wait anymore, right? I'm just going to ask you to and encourage you to do the following. The first step in this process, if you're struggling with that, we went through a little bit of accumulation. All right, we did. Went through a little bit of accumulation theory that we haven't covered in a while. You say, well, nice to cover it now. I covered it. I covered it with anybody who needed it to be covered, VIP or otherwise. Definitely. Doubling down. Double down. What are you going to do if you get down here? If you're accumulating? Double down. Why else would you participate in a market contrary to the basic tenets of market theory, supply and demand? The lower the price goes, the higher the demand. You can argue that if you want to mentally. No one told me that, or no one. Are you kidding me? Go watch some old streams. Oh, I didn't want to watch any. You're going to have to tell me you didn't want to watch any old streams. That's fine. That's not my fault. The ones who have in VIP who've been around for a while and scheduled into this are doing very well. Very well. And they still have what? A ton of heavy cash reserves. Boom. Anything change on that VIP? Nope. Been doing this for a while, right? Bam. Nicely done. Now, as you were to evaluate your position in any conflict that you get into, we have a expectation. We have a conflict right now. It's a nice conflict, isn't it? We have a conflict right now with a return expectation to a preceding level of resistance on this bell pattern formation. That's where your oscillators come in, guys. Your Z-Pack, right? Big time. When you look at the expectation to return to this preceding level of resistance, okay, to flip as support as we challenge into a 1 hourly ice cold short, which paid, to the 8 hourly golden short, which paid. As you look at your lower time frames, and as you see, this is the important part today. I wanted to cover this today because it's frequently discussed. Let's say it's frequently encountered and not so frequently discussed. I mean, we always look for the right answer in the market, right? We always look at the right answer in the markets. Like, is it going up or is it going down? Better question right now. Are you in the money? Did it go up or did it go down? Hey? Yeah, VIP style. People show up sweating, ready to deploy their capital. Is it going up or is it going down? What's the best response we got today? Did it go up or did it go down? Well, they're going to say it went up. It went up. Really, huh? So people just made money in the market, huh? Yeah, they just made money in the market. And I got to know, man. I just showed up. I'm 2 weeks late. I got to know right now, is it going up or going down? Oh, whoa. Sit down for a while. Sit down for a while. Sit down for a while. Sit down for a couple weeks. You mean to tell me, hold on, first of all, before you sit down, you mean to tell me that all these people in the market just made all this money? Huh? And you're about to jump in and you're about to make all the money? Whew. And it just went up in the last 2 weeks? Whoa, okay. But you're here to make money. I'll have to tell all these people who just over the last 2 weeks, made all this money. I mean, I'm going to have to tell them. That's news to them as well. That's really news to them because I don't think it was just 2 weeks. Oh, yeah, I got to tell you, guy, it wasn't just 2 weeks. It was 2 months. 2 months, 65 days. Ooh, 65 days, 2 months. They just made some money. That it just went in that direction. Oh, says the guy who shows up and wants the immediate answer, is it going up or going down? Oh, I see it. It took 65 days, huh, to go this way. I don't know how to do this. To go this way before, boom, it decided to go that way. Oh, okay. So the guy that wants the quick, easy answer, what's the best answer for him? Okay, when he says, is it going up or is it going down? Best answer, did it just go up or just go down? Well, it just went up. Great, did you catch it? Oh, you didn't, huh? But now you want to catch and jump in with the guys who went 65 days sideways. Oh, who caught what down here? First pattern, bull flag, micro bull flag. Every single turn in the road here had probabilities with it. You think it's easy? Right? The guy shows up at your front door on YouTube or otherwise, and he wants to jump into the mix in the equation. It's like, granted you didn't sit with us for 65 plus days straight, toiling in the back, right? Good stuff, huh? We love the market. But looking at the 65 days sideways before to the upside, you couldn't try. You couldn't if you tried. Explain to the person who wants the quick, easy fix. You couldn't if you tried. Explain to the person who wants the quick, easy fix really what the right answer is. The best thing is, is it going up or is it going down? Well, did it just go up or did it just go down? And I say that for the following reason today. When you find yourself in a conflict situation, a situation for conflict, I want you to evaluate it if you could and take this as a good with a grain of salt, right? In terms of the overall expression in the market, your participation, our participation as the number one trade group. I'm going to say this. Hey guys, it is not a tagline. It's just not. I see what our traders do. I just do. I know what our traders focus on. I'm no, neophyte here. I'm no just a Johnny come lately. Hey, I'm Johnny. No. As we look at the circumstance, right now we have a conflict, okay? We just do in the market. How do you handle a conflict, okay? The maxim is following from the New York Institute of Finance. We just set into a new 8 hourly? Or did we just pull back here? Let's see if we just set a new 8 hourly candle. Boom. Now, the nice thing about this, what did we just crash into? Boom, 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 boom. Pay attention. Now, we crossed over on our Bollinger. We set a candle over that 20 moving average very cleanly. I let the VIP know that last night, right? Nice candle set up and over. Okay. Target was what? The upside band. I love the fact that we hit into our 8 hourly golden short line instead of the topside band. Reinforces the work that we do. Very nicely done, huh? Yeah, that paid. It was a nice little quick short. Boom, boom. As you look at a conflict, a mix amongst your patterns that you're trading, the number one thing I'd like you to evaluate, and guys, when I go through the rough, tough stuff, it's for people that just show up and they want the quick, easy answer. YouTube is very good, just so that you know. YouTube's very good about sliding. When they fast forward through, they're going to hear the part of this story that I've delivered to you this morning, and they will go bags packing. Okay? Bye-bye. right? So they're very good at that. It reinforces the work that we do and differentiates us from the other participants in the market who want to sell, sing, song, hype to people and get them hurt in the market. We don't. I don't want people to get hurt in the market. Not around me. Not here. No sad songs. Hey, you guys got that? Copy that, right? Now, in terms of the answers, you know the answers. They are what? Dig into your lower time frames, into your oscillators, right? Just within this move, what just happened here? Let's go to the 1 minute time frame. Whoa, that's the 1 minute time frame. That's a lot of trades. You start getting into what traders are trading. When I tell you guys, traders are trading. You guys know this. Traders are trading, right? To get through the minutia and the detail of what's being traded, you see our fire and ice lines. They're trading. They're pushing. They're trading. They're pivoting on your RSI stochastic MACD and moment. Let's just say we got RSI stochastic MACD and what's the other one that we're throwing in and Bollinger, right? They just are. They're up and over the 20 on lower time frames. You may be trading. We have VIP trading on the 1 minute, 30 second, 15 second, 5 second, 1 second, 5 minute, 3 minute, 15 minute, 30 minute, 45 minute, 1 hourly, 8 hourly, 4 hourly, 77 minute, cha-ching, daily, weekly. We have all of that. So if it isn't relevant to you, you don't need to tune out. It's just it is the process of what we're doing. Let's dig into lower time frames so you get an expression here. ZPAC has done what? It's been nice along some pickups here consistently. If you see this, that's nice. Preceding pivot levels down into this red turf, huh? Looking at the 1 minute in isolation is not the preferred style. I'm going to let some other VIP chime in maybe in the back. Venus, maybe you want to let some VIP know how trading has been with ZPAC, with RSI, stochastics, with fire and ice, what's been productive, with your patterns, what's been good. Venus loves to trade. That's why we're building. Guys, love building with them. Would only build with Venus. She's just built for the market. That's it. That's it. You guys know that. She loves to trade. Without a doubt. She's good at trading. She deploys New York Institute of Finance. Take a look at her New York Institute of Finance book. It's the worst piece of evidence against that woman. I'm going to tell you guys, the worst piece of evidence against that woman. Her New York Institute of Finance book, which she has toiled through so much and highlighted and bookmarked and stamped and photocopied and on the guys, it's such a great piece of evidence in terms of what builds Venus into who she is. It's awesome. That's what's supposed to happen. I'm telling you guys. So when we look at a breakout syndrome here, we look at a conflict not even just between our specific, pay attention guys, but between our patterns. As we start to, it's like we've been dealt a hand at the table. It's like, okay, I got a 9 showing. I got a 9 showing. A dealer has a 9 showing, right? This is maybe an 8 showing, a 9 or 8 or 9 showing at the blackjack table. I've got 2 face cards, or I got a face card and a 4. A face card and a 4. Dealer has an 8 showing. Hold on, right? Hold on. Where's my blackjack? Right? I got 14. All right. And now I'm the type of trader, I'll do well on blackjack tables sometimes because I'll refuse to bust. Oh my gosh, the other traders hate me. But I'll know when to throw in cash, this, that, because I will never bust. I will not take a card to bust me ever. And if dealer beats, maybe I'll double down. But I won't bust. I'll be the guy at the table. And if you want to talk about upsetting some other players at the table, but what am I never going to do? I'm never going to tell the dealer, give me a card and kick me off this round. Very, very disturbing. If you know how to play blackjack, you're trying to get 21 all the time, and this is not a gambling lesson at all. It's fun talk, though. I played blackjack growing up. I'll never bust. I'll go in with modus operandi. You're not gonna beat me, all right? With giving me a card, and then I don't even have to play you. I don't even get the chance to watch you bust. So, and I'll go through different modes. I'll try different things. I know some top line gamblers, some top line gamblers. Some good guys who were really good at that craft. Some guys who owned casinos, the ones you know about and go visit and play at. Yeah, those guys. So when you talk about, well, they hate me at the table, this and that, it's like, well, I know some of the actual guys who own the tables, some good guys in the past, etc. Looking at the framework here, we have the descending wedge. Percentage of reaching the top, VIP have this in the back. Percentage of reaching the top. This gets tough. Trade 100 of these, trade 200 of these. You'll start to get it. You'll start to see it. It's like, yeah, you got it. Okay, the percentage of reaching this top line feature, yeah. Is it the best? It's like, man, that's a great percentage. I love that. I'll trade that every time. No, you won't. If you trade enough of them, you won't. Just trade 20 or 30 of them on the lower time frames, and then tell me. And now you may go through a spell. You may go through a period of time, and you'll notice it if you trade enough of them at the lower time frames. You'll know it's like, man, those were hot today. I traded 4 descending wedges in a row that just blasted not only to the top but up and through. They were clear continuation patterns. Yes, but you'll notice it. And you'll be like, man, today those descending wedges were in the dumps. They wouldn't go back to they wouldn't meet their target of the top of the descending wedge. I couldn't find one that would. Hey. So you may go through a real hot day for descending wedges. You may go through a real cold day or cold couple weeks on these descending wedges. If you go through a hot day and they're all producing back to pattern top or above as a clear continuation pattern, you notice this. Right? The key focal here is the following, is to frame your participation, and I'm just going to say this, not around. This is a good challenge for right now. It's a great challenge for right now. Can you separate pay attention, while Bitcoin just beat the correlative challenge between the DXY, which you see featured on top here, the DXY, while Bitcoin just beat the correlative challenge, that inverse correlation challenge, and took the same direction as the DXY, while Bitcoin just did that and surprised in terms of correlation, bucked the trend. Bitcoin bucked the trend, right? We were looking at what? At the hourly, which needed to flip around. Did it? Yes, on our ZPAC. It's our hero indicator. You guys know it might as well be our hero indicator. Why would I call it that? Because it is the synthesis of and better than. Yeah, synthesis of and better than. RSI, MACD, stochastics, momentum, MACD. Guys, it's a synthesis of and better than those indicators. I mean, that's impossible. It's not a synthesis of and better than those indicators. It can't be. Really? You sure? Are you sure it can't be? I don't know, guys. It's pretty good. In terms of the information presented, if you know how to use it, yeah, it is. It is. Bottom line, it is. I know how it's built. I know the information that it presents to the traders. I know what these volatility shakeups in here mean. It's not overly complicated. You got a moving average here. I know what these green lines are. I know these hits along a standard deviation of 3 instead of let's say a Bollinger of 2. John Bollinger, boring. He's all right, but he's kind of boring. He wants to focus on the standard deviation of 2. I want to know why Bitcoin keeps hitting into the standard deviation of 3. And why it has a tendency to hit up into a standard deviation of 4 and 5. That's what interests me. Right? So that's the information that you're going to become equipped with when it's hitting down into a sell zone, right? And we see these repeated hits down into -3, like a standard deviation of not just 2 on a Bollinger Band. Boring. I want to know when the volatility is going to hit down into a measurement of 3. I'm interested when the volatility is going to hit down into a measurement of 4. And how consistently on a repetitive pattern basis it's going to do that on the different time frames, on a time frame of 5, on a time frame of 15. You mean I could schedule orders in at a standard deviation and it's going to tell me a price? Whoa. Whoa, 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 whoa. Because I just said it's better than RSI. It's better than. Hello, you paying attention? You listening? Listen up, guys. Does your Bollinger just float around necessarily and tell you the price on a third or fourth or fifth standard deviation away from a moving average of 20? Say a standardized moving average of 20. Does the Bollinger Band do that? No. Does your RSI do that? No. Does your stochastic do that? No. Why would you want to do that? Why would you want to know a standard deviation of a level, let's say a hit along a standard deviation of 4 or 5? Because that is your volatility. Why would you want to know the price of a standard deviation of 4 or 5? Because that's the volatility. What's another word for expression or explanation of volatility? That's literally the buying and selling pressure that's going on between the bulls and the bears. It's literally the buying and selling in the market. It is the market. It is the market. Hitting a standard deviation of 4, that's a volatility. If I just say that's the participation of the bulls and the bears, that's the balance of power that's going on when, bam, we see hit into 4, hit into 5. The volatility is the price. The fluctuation in price, it is the market. So when you go cap line only on your Z-Pack and you select here, show only capital line, just the capital line, clean up the noise. All right, now we have simple signals. Now it looks like my RSI or my stochastics or my MACD. Yeah, now we have a simple signal line. We have blue. We have the red, white, and blue, right? Capital line. You've got your signal, blue, bulls in control, going to the upside. That's your kernel, guys, your kernel regression, advanced calculative in the equation that your RSI doesn't have. Hello. That your RSI doesn't have a kernel regression formula? Nope. Hold on. Your stochastics doesn't have a kernel regression formula? Nope. Borderline machine learning, kernel regression formula. Okay, look it up. Watch an MIT. I've given that to you guys in the back. Watch an MIT discourse on kernel regression and machine learning. Watch it. If you don't find immediate relevancy in that, I will be absolutely astounded. If you don't find immediate relevancy within the first 5 to 10 minutes of an MIT lecture on kernel regression and machine learning, you got to be on another planet, not just say, wait. It's going to take random plot distributions and divide things in two sides of the road and establish a parameter of, yes, guys. You're going to watch that MIT thing. It's a little complicated, but I can see how that could be hugely, like the admission of you guys. I can see how that could be hugely relevant to trading on the larger time frame, on the lower time frame. Okay? So I'm just bringing this up, guys, to inspire you all. I'm not bringing it up to confuse anybody. That's a difficult. Sounds like a difficult group to be a part of. To the contrary, when you're looking for the right answers, right, and when we endeavor to bring those to you, the challenge is to take a little bit of a back seat from this ramp up phase that you want to on a day where Bitcoin challenges in and throttles in and does beat the correlative aspects. The probabilities played out with the feature that we brought last night, particularly the 60-40 split on the broadening. Essentially, it's a reverse triangle. You can call it a reverse triangle. It's an easy way to look at it, right? Is this broadening, expanding, symmetrical bottom formation. Just the level of resistance, level of support, buyers on support, sellers on resistance. Okay? The 60-40 split of this rolling to the upside. We had a real nice transition here. Really nice transition, didn't we? Look at this on the hourly. Let's look at our indicator. Okay? Looking at a transition feature here. Possible transition into the white and then blue, boom. The red, white, and blue, bam. That's what we needed on the hourly. You guys got that. What had been strong? What turned extremely well here? The 4 hourly, right? And we need that. Look at that. Nice turn on the 4 hourly. Noted. Aside from the indicators, the fancy indicators, everything else, the talk of stochastics, RSI, all these things you have to keep reading again. A kernel regression, right? Looking at the capital line, we'll just take it off for a minute. Looking at the framework, sure, you can trade all day long if you want to. You can trade descending wedges. I'd recommend that you Focus instead on a higher probability pattern to throw into the mix to try and increase your earnings. Everybody knows about a descending wedge. 90+% of the market participants, traders, know about a descending wedge. How many are really scheduled into a bump and run and really know what that is? They're scheduled into an expanding wedge and really know what that is. Or let's say a diamond pattern, a diamond reversal. Or know why I'm focused on the expanding wedge, bump and run, or a diamond pattern. Top tier performers. Top tier, top shelf. Yes, Tarajaula, they would say, huh? Overseas in Dubai, Tarajaula, Habibi, huh? Yeah, you guys get that right. I speak a bit of Arabic, not a whole lot. But looking at that, this is the pattern here that if I remove it, thank gosh, you can all relax. Everybody can relax now. We know what that is. Whew, thank goodness. What I just take off of the map here, what I just take off the map. Now, you feel more settled and comfortable with that on Bitcoin. Whew, thankfully, hey, I feel more comfortable. Now, really, what is this, guys? What is this? You can take it out. You can leave it, too. You can take it and leave it. This is the license to operate the... It is, guys. It's the license to operate the only umbrella shop on Fifth Avenue in the middle of a surprise torrential downpour. That's the license right there. It just is. You don't have to agree or disagree with it. You can just take it for what it is. That is right there the opportunity. That's the license to operate the only umbrella shop on Fifth Avenue. Right there. That's it. You got to work on capital. You got to work on capital management. You got to do that. You're in the market. You're deploying your money. You work on your capital management. What have I given you in the form of a way to do that? Some help, a capital line. All right. If it's red, what does that mean? That means you have a notion that at least you could come back in touch with the 20 moving average. At least you could come back in touch with the 20 moving average on that time frame. Right? How did that prove true? On the daily? Yes. Yes. For starters, at least you could come in contact with that 20 moving average. Let's look at that. So we go red, and we're prepared for what? Potential contact back on the 20 moving average. We went red, contacted back 20 moving average, challenged, and what are we doing on the daily now? Hey, what are you doing, Bitcoin? Trying to get back up and over the 20 moving average right now. Big moment. Nicely done. Possible transition. We need to flip to blue. Does that mean that blue on the capital line is just going to mean that we're over the 20 moving average? Nope. Back test this a touch, okay? So as we talk about your competing, let's say, your competing probabilities, descending wedge versus expansion, bump and run, or expanding diagonal, expanding broadening wedge. We'll say expanding broadening wedge. I just call it a bell. We rock the bells. You guys know that. We rock the bells. Increasing volatility with the buyers picking up along a level of support. You guys know we rock the bells. We like when these rock, boom, to the upside. And they will. There's a percentage probability. What's the sweet spot? Getting back to the level of resistance. We talked about this yesterday. And you guys know. You guys know. And they'll continually surprise you until you force yourself to trade them. They just will. And the VIP who trade them, they know. The worst nightmare is a spill out further down along support, right? Until, boom, the pickup back to resistance. It's an established level of resistance. You want to go up. Well, do you want to operate further along the level of support? Yes, you do. You guys know that. So when you're in this zone here, the one, I'm going to say the trader who doesn't want to deal with mixed signals is the one who's not in the money. The trader who doesn't want to deal with mixed signals and do a proper evaluation of their participation in the market is a trader who isn't in the money. You guys get that, right? Big time. The trader who's in the money is happy to do his calculation and look at it and say, okay, great. Well, I'm up 4 times or 5 times my money. Cool, no problem. Take a little off the table. Take a little off the shelf. Yeah. The trader who is up 4 or 5 times his money, no problem. No problem. Yeah, we got kind of a mixed signal here. She's able to dole out and tell people, well, yeah, you have a little bit of a mixed probability here. Return to prior resistance on the bell formation. We're contacting the 20 moving average. We'd like to see a clean set at some point today over that 20 moving average, understanding the Bollinger Band, understanding how it just worked on the 8 hourly. Just got paid on the 8 hourly. Boom, 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 boom. Just hit a target. Completely different discussion with the trader who just was in the back, saw the upside target, and just decided to hit the button and hit the upside target. Completely different discussion. 100%. And they're deploying this rationale on the lower time frames, guys, at a pace and rapidity and a level of efficiency and proficiency that you have to get involved in the game and have to start really trading to understand. Right? Love it. Beautiful. Congratulations to the VIP. Venus. Beautiful trades. How does she do it? I don't know. You guys seen her? Have you seen her? Guys, have you seen her specific New York Institute of Finance book? And I have to say, we want to see that. We want to see it. We want to see it because now it's actually been passed on, I think, to her daughter. Shout out to Sophie. What's up? Sophie. Rock and roll, Sophie. She loves the market too. So it's a it must be genetic. So looking at Venus 700% short, and where are we at? 475% long. So there you go. The 4 to 5 time return on the long, the 67 time return on the short. Now what's the factor here? The factor is, in terms of the level of diligence, the biggest piece of evidence against that woman, it's just funny. She's my partner. We build VIP. You know, is she getting all these trade signals that the rest of VIP isn't? No. She might be from the New York Institute of Finance. Yay. Capital line, momentum, MACD, stochastics. Yeah. Basic common stuff. It's there for everybody. And that'll be my biggest joke with you. Venus is that the biggest piece of evidence against that woman in life, maybe. She's such a wonderful woman. Is the New York Institute of Finance book. She's devoured it. She knows every pattern, the pattern index, the probability charts. She knows the bells. She works with the trades, the Bollinger Bands, right? She's willing to hit the button. Hey, shout out to Venus. Beautiful trades, wonderful trades. Excited to be building with you in 2023. Going to take the market by storm. Excited about the team that we have. Rallying around some of the projects that we're bringing to you guys as traders. We're excited about that. I'm going to let you guys go. I need to eat a little bit of food. I'll wake up early. Yeah, I got to eat and power up. Boom, boom. Go hit the iron. We got to do it, guys. If you're not a member yet of VIP, we want to invite you to join. It's America's #1 trade group, but it's internationally renowned. We've got international footholds in everything from Scotland to Australia, loud and proud. UK, Asia, not so much. That's okay, guys. We invite you to join today. This is London Informer, hedge fund owner, private, non-SEC, not financial advice. Congrats to everybody who caught that swing to the upside. Very nicely done. What paid off? Your 4 hourly RSI. Noted. Did it push a little bit? It did. It pushed a little bit along the downside here. Challenged into that 50-50 probability of setting a lower low. We discussed that. 4 hourly was nice, wasn't it? Could set, I said, could set a lower low. Briefly, lightly, a lower low on that 4 hourly oversold condition. Shout out, guys. Way to go. Congratulations to everybody who's trading. These are good days because I know you guys are trading. Every day is a good day when I know that you're trading. If you're doing our 100 rounds, make sure that you're lightly exposed. Lightly enough, give yourself a month, 2 months to become really competitive with the guys who've been doing this and the girls have been doing this for years. And you'll get there. I see it happening, guys, every day with our VIP. This is London with Bitcoin Spike and VIP Trader. Take care. Bye-bye.